Hello there. Well, the globe should be spinning. Let's see whether it does or whether it doesn't. Welcome to this live show on the 30th of March 2021. Just before we bring Meighan in, let me just do what I normally do, which is just to remind everybody this is not financial advice. Do please play nice in the chat room. No restless. We do moderate this stream. We do turn people off if they get antsy. Do encourage a lot of chat, a lot of questions. This is as of 30th of March 2021. If you want to get my attention and ask a question, use that Walk the World in the chat because there's always plenty going on. And I've also got Super Chat enabled, which means that if you want to get your question at the top of the queue, you can use Super Chat to do that. Or if you want to make a contribution to the show overall, that's also a way of doing it too. So without further ado, let me push this button and bring Meighan in. Hello there.
Well, hello, Martin. How are you?
I'm pretty good. How are you going?
I'm pretty good. That's a lovely looking Brisbane sky in the background of me, isn't it?
It is.
Like that right now.
Yeah.
A bit darker than that. Should have made a different choice.
Fair enough. Now, you're a bit quieter than you were when we did the so can you turn yourself up slightly or shall I turn you up here?
Let me just move that up a little bit higher. How's that?
Yeah, that's a lot better. Yeah. Yeah.
It's very sensitive, isn't it? You've got to get that microphone in the right place.
Well, it's amazing the difference it makes, right? If it's not right or if it is right. But that looks good now. Well, welcome and thank you very much for spending some of your Tuesday evening with us. I suppose I could say you haven't got much else to do at the moment with Brisbane lockdown, right?
I've got nothing to do apart from work at the moment, actually. My children are out and we're in lockdown. We're in a 3-day lockdown, as referred to. It's a bit of a time to breathe, I think.
Just introduce yourself, would you? Just give people a little bit of a sense. Because you've been in the Brisbane market for quite some time. Yeah. And, you've got a really good track record and a bit of a good sense of what's going on. So just give us the background story a bit.
Yeah, I sort of came out of corporate and into property about 20 years ago, and at that time did a little bit of selling, sort of getting a feel for what property was really about, and in 2003 set up a property buyers agency, and it was one of the first in Brisbane at the time. So we've been going for about 17, 18 years, and we're just a specialist buyers agency. So don't sell property. We just work on the purchasing side and the advisory side of the industry. And in that time, we've helped about nearly 750 people. And our goal is to help people make intelligent decisions and choose the right home or the right investment property. Bought over $500 million worth of property, so fairly active and got my finger on the pulse. I have to say I'm really puzzled by this market at the moment. We're going to go into that and explain a lot more, but it's unlike anything I've ever seen before. I also have another business with a Sydney buyers agent, Veronica Morgan. Home Buyer Academy is the name of that business, and that was really focused for first home buyers and helping them get into the marketplace and make some really good decisions as well. So it's about 20 years. 2020 was a very interesting year for me personally. It had everything. It had death, divorce, sold properties, bought properties, renovating, the financial and economic uncertainty that was all going on. But we've come out of it, and it's a really interesting time that we're seeing now in the Brisbane market.
Yeah, it is, absolutely. And what's fascinating about the Brisbane market, as I said right at the start, this is not a single market, right? It is actually a very fragmented market. And
absolutely.
In a moment or two, we might, touch on some of that because, I've had a load of people saying, the Brisbane market's the hottest market in the country, et cetera, et cetera, et cetera. Well, the truth is that there might be the odd postcode where things are actually reasonably hot at the moment, and we'll touch on a few of those. But there are also a number of others where there is very little going on.
Yep.
And what I'm trying to do tonight is to sort of tease out some of those individual areas. Now, one of the ones that you mentioned to me as somewhere to look at, we might put it up on the screen, right, is this one at Wahroonga, I think it's called. Is that right?
Wahroonga. Yeah, Wahroonga.
4104. Now, this basically is, a 31% median price rise over the last 12 months. Is what I'm seeing. And you said it was probably one of the hottest markets in the place. So can we talk a little bit about that particular market and why do you think this one in particular has really, taken off the way that it clearly has?
There's a couple of things happening in that suburb, and there's a few suburbs that are racing far ahead of others in terms of price growth. But Yeronga is a suburb that does have quite a number of streets and properties that flood. So post 2011 and 2012, where we saw some significant events, some significant flooding events, prices were really quite heavily impacted in a negative way in that suburb. So we've got probably quite a lot of people who are very, very cautious when they look at a suburb like Yeronga, Fairfield, some of the other riverfront or riverside suburbs. They've probably been languishing a little bit in terms of their growth over the last few years. But in a market like this, and we're going to talk a lot about this market, in a market like this, people are making huge compromises just to get in any way that they can. And one of the things that they're choosing to overlook is flooding. And we're seeing properties that might normally, in a normal, reasonably balanced market, that people would have steered clear of because they have significant flooding issues, or they would have been much more reticent to pay big money for them. That they would have been probably pricing the property at a lower price because of those risks and issues. People are just overlooking that at the moment. It's they're taking greater risks, and Yeronga is one of the suburbs that we have seen where people are paying the price for a flood affected property. They're paying the same money as they would for a non-flood affected property, and we just don't normally see that unless we're in a really, really strong seller's market. So Yeronga's up. The stats from the REIQ show that it's up 48.5% in the 5 years to December 2020. That's the highest growth that we've seen in a single suburb. Noosa's probably had pretty similar, but that's a coastal tourism sort of market that's quite different to Brisbane. But in the last 12 months, at least 28%, and the median house price there is 1.085. We haven't seen prices like that in Yeronga before. So it is one of those suburbs where people are prepared to make some compromises that they weren't prepared to make in a normal market. And there's a few other suburbs as well. We've seen riverfront properties as well. The demand for riverfront properties, regardless of whether they're flood affected or not, some are quite elevated, so they're not flood affected, but others are quite flat and really quite flood affected. People have forgotten that as well, and they are really just paying what they have to get in, to be honest.
Yeah, absolutely. Well, Alyssa asked an interesting question. Can you get loans on flooded properties if you can't get insurance? That's a good question, isn't it?
It's an interesting question. I'm not in the insurance game, but I don't. I guess that's a question for a broker, to be honest.
Well, I can give you a bit of an answer. So, yeah, most mortgage companies would actually be concerned about building and contents insurance, contents less so, but building absolutely. So they would need to find appropriate cover, and I would have thought that the insurance industry would, of course, they have very granular information about individual suburbs and the risks, so they probably would require insurance. I would have thought if you've got a mortgage, if you buy it free and home free, no mortgage, no issue. But if in fact you need a mortgage, you almost certainly will need some sort of cover, I think. So that would be definitely could put some people off because the premiums would be a lot higher.
Yeah, and I think that's the thing. Most people can get insurance on properties that are flood affected, but it's the cost that you have to pay to get that additional insurance on a high risk property that might be the challenge to overcome.
Yeah, absolutely. And I'll tell you a little story. I've done a few one-on-one conversations with people in and around Brisbane. And I show them the Brisbane flood maps, right, and saying, hey, this is one of the tools you should really be looking at if you are actually considering buying. And, almost to a person, they didn't know they existed, right? And when you show them the, the 25, 50, 100-year flood lines, boy, that changes their view a little bit. And, of course, I was talking to somebody the other day in Sydney just before the very big floods we had here, and I said, well, you should just take account of the 50 and 100-year line levels, because it doesn't happen often, but when it does happen, it really does happen. So
it really does, doesn't it? But the interesting thing is, and this is something that we struggle with as professionals in the industry, is there's 3 different sources of flood information from the Brisbane City Council, and each of them has different information. So if you're looking at the Floodwise reports, that is different to the Floodwise map, and it's different to the city plan flood overlay. So each of the modelling is actually different on those 3 different sources of information from one central provider, and that's the Brisbane City Council. So you've got to be a little bit careful when you're doing that, and make sure you go to the right source, which is the Brisbane City Plan and the flood overlay, and the overland flow overlay as well. A lot of people don't know about the overland flow overlay. That's a mouthful. That's one of the overlands on Brisbane City Plan that shows, because Brisbane's quite hilly, water has to travel from the top of a hill down, and there are certain pathways that you can't build or interrupt the flow of water down a hill into a catchment area, and that can affect whether you can put a pool in, or whether you can build under a house, or lift it, or raise it, or what you can do. So it's not just flooding, that the rising water of flooding that you need to be aware of in Brisbane. It's also the way that water travels down the hills.
Absolutely. And interestingly, how few people ask about other suburbs. Let me just pick this one up from Cross Stitch Ange, because I don't know this location. You might. Let me just put it up. So can we talk about Castledine, right? A mixture of older and newer style houses creeping into the inner city suburb, close to many amenities, airport, a quick direct trip to the sunny coast. Now, where does that sit on the spectrum of, booming, less booming?
Look, Castledine is on the north side of Brisbane. It's about, I'm going to take a guess, at about 12, 13, maybe 14 kilometres out of the CBD on the north side. It is on the route through to the Sunshine Coast. So it is on that northern tip, I guess you would say, of Brisbane local government. It has got a mixture of some of the older sort of 60s, 70s, 80s style properties, and although not much in terms of the very old character that is very traditional in Queensland. So it's one of those suburbs that was developed much later than the inner ring suburbs. Hasn't had particularly great growth over time, and one of the reasons is that there's still some land to be released. So there have been parcels of land that have been able to be released that increases the supply into the suburb, and of course we know that the supply-demand equation is the thing that drives price growth, and when you're adding land supply in a particular suburb, then it doesn't necessarily allow for growth of the existing properties. So I wouldn't necessarily put it in my bag of top 5 high growth suburbs to look at, but there are a lot of good family features in Castledine if it's a family home that you're looking at.
Yeah, very good. And Cross Stitch Ange also makes the point, which is quite a good one, that the in a flooded environment you become basically an island. we saw some of that around areas of Sydney in the last couple of weeks as well, where people were cut off for a number of days.
Yeah.
So it is important. I always say to people when they actually think about, thinking about looking at an area, some statistics which are quite useful: the flood statistics, the insurance premiums, which is sort of linked, and the other one is the crime stats as well. It's amazing how people don't look at the crime stats, but I think that's another very important factor that people should put on the table when they're thinking about a particular area.
Yeah, it can have an impact, and the type of crime as well, because not just the prevalence of criminal activity, but what is it that these activities are, and we often find that it's vastly different in one suburb to another, and sometimes it's actually quite affluent areas that have a higher number of break-ins because there's more stuff to steal, I guess. I don't know. I don't really know the mind of criminals, but and then crime in terms of drug use and those sorts of misdemeanors might be quite different in other suburbs. So the type of crime is something to look at as well.
Yeah, that's a very good point. Now let's switch to another suburb, and I want to go into the centre of Brisbane now, and I want to look specifically at units in the CBD, right? Because there's a very interesting and different story to tell there. This is actually the units in the CBD, and you can see there that the price growth basically has gone nowhere, even over the last year, right?
Yep.
In fact, if you look at where prices were and are, there's been very little improvement. In fact, after inflation, 0.5% between 2013 and 2020, right? I mean, that's a reasonably
better than negative.
Well, it is better than negative, but of course, in the centre of Brisbane, it's predominantly units. There's almost no houses now.
Yeah.
A lot of it's high rise, and there's a lot of new high rise coming on into that area of Brisbane. What do you think with regards to some of the older style units that are still in and around the centre of Brisbane, but they're sort of, perhaps in the minority now? How do you read that part of the market?
So it's interesting actually, because the unit market, like everything else, there's no singular market. We're seeing really strong demand and growth in certain sectors of the unit market, and then quite negative downward pressure on others. And Brisbane, there's certain sort of higher density areas, the 4,000 postcode being one, and then you've got West End, South Bank sort of areas, and these are markets where the unit statistics are wrapped up into one, so it doesn't differentiate between a 3-bedroom, 4-bedroom unit, or that's a larger sort of almost house size versus a 2-bedroom or a 1-bedroom apartment that's very cookie cutter and highly prevalent and easily replaced, and pretty much one's exactly the same as another, apart from a couple of square meters maybe in size. We certainly are seeing that units that are particularly sought after by downsizers, so people coming out of the family home into a lifestyle sort of choice of being able to not have a yard to look after, but it's still a big unit with a great balcony and right in the middle of the lifestyle areas that they want to be part of, but they can lock it up, leave, and get out of town and not worry about whether the pool's going to overflow if it rains, or what the gardens are looking like. Someone else looks after that for them. So that market, that downsizer market, the house replacement market is quite active and quite strong, and we are seeing upward pressure on those types of properties in terms of pricing. There was a sale, I'm just trying to find the statistic, there was a sale of an apartment in, here we go, November 2020. There was a sale of an apartment for 1.91 million. It resold in February 21 with no work being done whatsoever for 2.2 million. Now, that's a really different market to the product that has been developed for and aimed at first home buyers and investors. And they're typically, they're very, very similar 2-bed or 1-bed. 1-beds aren't great for Brisbane, but 2-bedroom apartments, maybe 2 bathrooms and 1 car. Those apartments are not reselling particularly well, and most are reselling at a loss.
Very interesting, right? And what about the old question of poor quality construction and the flammable cladding and those sorts of things? Because certainly in Sydney and Melbourne, we are seeing many, particularly high-rise areas. And, I know a number of people who've suddenly had their fees, basically, the strata fees, go through the roof simply because of the poor quality construction and particularly the flammable cladding. In some cases, it's $20,000, $30,000, $40,000 of additional money required, right?
That's hard to find.
Which is extremely hard to find, and it completely changes the value proposition. And interestingly, of course, quite often you find that some of the people who've got property live overseas and they are never contactable. So the whole thing gets horribly messy. Yeah,
we haven't heard as much of that in Brisbane. Now, I don't know if that it's not going on, or if it's just not really hitting the media, if it hasn't been enough of there's not as much prevalence as there is in Sydney and Melbourne. I certainly have read about it quite a lot in Sydney and Melbourne. But no, just haven't heard so much about it. And we, as a buyer's agency, rarely buy apartments in big complexes. So we haven't had particularly personal experience in having to assess any of those types of things, but not seeing it as much. I don't know if that means that we've got better builders up here. Probably not. They're all using the same materials, and although some of the bigger builders have been around for many years, and most are pretty good at fixing their issues when they come up.
Yeah, absolutely. Well, of course, one of the problems we got in Sydney is that a building company pops out of nowhere, builds a high rise, and then goes back to China and disappears. Right. So there's the question then of, well, hang on. Who's got the
going to fix the
warranty? Who's going to fix it? Right. Yeah.
Defects. Yeah.
And we know that there are a number of those issues. So it's quite interesting. I agree. I haven't heard as much in terms of the Brisbane area, but I'm convinced that probably we might ahead, but we'll see. Let's go to another area. And now another one you suggested we should look at was, again, another suburb, Ashgrove, right? 4060. Now, there is a bit of a spike there, 15-16% just over the last year, so not as much as the other one we looked at. Again, is this a similar sort of scenario in terms of the sort of demand that's there, or again?
No, this is very, very different.
Yeah,
so not so much flood in this area. In fact, it's quite an elevated hilly area. So, if you do the flood overlay maps, there's not a lot of impact in on many properties. What has changed significantly in this suburb is the demand that has been driven by families to get into the schooling in the area. So it's something that's been quite unprecedented in Brisbane. We've sometimes seen little pockets of demand for certain schools at certain times, but this has been unlike anything that I've seen in 20 odd years, and that is that the schools, the private and the public schools in the suburb, have developed such a strong reputation that people are really quite falling over themselves to get their children within the catchments for the state school, or to be in walking distance of there's 5 private schools in the area. Historically, looking at growth over the last 5 years, that's about 43% over 5 years. So it's been very strong. And the median house price is now 1.172. Now, that's median. You used to be able to buy a good sized family home for about 1.5, 1.6. You're now well over $2 million to buy a reasonably sized family home in this particular suburb. And it's largely because it is a strong character area, so a lot of pre-war, 1930s, 1920s, even sort of around that 1910, but a large pocket of 1930s homes that people have been improving over time, renovating. In Queensland, you raise a house up and you build another level underneath. You don't sort of build on top, so you raise it up and you double the floor plan by doing that, and that's been happening quite a lot in this suburb. People generally don't move out until their children have left home, and then it's ready to downsize, and that's when you see the turnover of houses. So there's a lot of demand and not a lot of turnover happening, and that's put a lot of pressure on prices to push them up. There's only been in Ashgrove, I did a quick look, and there were 23 sales over $2 million historically, so in all of the sales history of Ashgrove, and half of those have been in the last 12 months. So that gives you an idea of how rapidly prices have moved and at what price points they've moved.
That's very interesting, isn't it? And were they buyers from interstate or were they local buyers? I had a question here from Rosie, which is basically going, have prices in the suburbs that receive most interstate migration changed much? I mean, where are the buyers coming from generally? Is it possible to make some general comments? Or
certainly. And we're seeing it on the ground, and it's a lot of local upgraders. So that would be majority of the buyers that are looking to get into these family suburbs. But we've also had a huge amount of expats repatriate. So people who had had been living overseas, Hong Kong, Singapore, Dubai, whatever the case may be, their employment situations and probably their feeling of safety has changed significantly. They've come back to Brisbane, and they're looking for these kinds of areas, and they're probably the greatest drivers of demand for the family homes in these areas, and have got the financial capability to put into to bigger family homes. So that's one of the biggest markets. The interstate relocation is certainly a factor, but I would say it's not as big as the repatriation of expats.
Right, very interesting. And, I've had a number of conversations. I run what I call one-on-one sessions where people talk to me about a particular area. I've had quite a few people come back from overseas because of the international issues around the virus and things, and trying to navigate the Australian property market, partly from being overseas and then coming back. It amazes me how many of them do settle in around Queensland and Brisbane. It does seem to be a very hot spot. And the three reasons I get is the climate, the prices are not as silly as Sydney and Melbourne, right? And actually, because of that, the chances of getting perhaps a nicer place, the lifestyle, it's a better package than Sydney and Melbourne. And
why would you live anywhere else, Martin?
Well, I got to say,
might be a little bit biased, but
well, I have. Brisbane's been a place I've spent a lot of time in. Particularly Sunshine Coast as well. It is interesting. It really is fascinating just listening to what people's calculus is when they actually. But then I show them the typical charts, right? Because if you do a long-term trend, I tried to find a chart, but I couldn't find it in time. But if you do a long-term trend of home prices across Greater Brisbane, right? It's nothing like Sydney and Melbourne, right? Because there you had massive sort of spike ups and
peaks and troughs and
So what would you describe the overall trajectory over the last say 30 years or so?
I really like to use the analogy of the horse. So I know it sounds a bit strange, but it really is. Like Sydney and Melbourne are like these, 2-year-old geldings, and they're a bit green, and they get out there and they run really hard. When the market is hot, Sydney and Melbourne are like these race horses that just get out there and fly, but they also break down. And when they break down really badly. And that's what we see when you look at growth charts for Sydney and Melbourne, is you see those really strong gains, and then they actually come down. And you can if you time your market reasonably well and you're thinking counter-cyclically, there are opportunities to be had in those markets. Brisbane, I liken to a Clydesdale horse. It's that market that just kind of plods along. There's nothing exciting about it, really. We have had some peaks, 2003, 2007, 9, 14, now 21, but it is pretty steady. If you look at the growth charts, and I'm not talking Greater Brisbane, I'm talking Brisbane local government area. So those are two very different statistics. But it's pretty steady. It just has this pretty steady, upward trajectory. And even post GFC, we didn't have a huge dip in prices. We just had a steadying of prices. And I think that's the thing that is a little bit more stable about the Brisbane market, is that it is a little bit more reliable in terms of that long-term growth being a bit steadier, a little bit less. Sometimes you're forced to sell in a downturn market, and if that's the case, it's harder to do that, and you might suffer more losses in Sydney and Melbourne than you would in Brisbane.
Yeah, very, very interesting. And I think that's a really important observation, right? More stable generally, right? And, you're not probably going to make the killing that you might make somewhere else generally.
It's not a gambling market. You're not going to get in and make make yourself 20% in 2 years. I think we're on track for that this year. So, prove me wrong, everybody.
Yeah. Well, the old Bris Vegas, right? People sometimes call it, but actually, from a property perspective, I think it's more stable, it's more predictable in many ways. Now, one of the things that is creating a bit of a sort of a hiatus, though, is this knockdown rebuild. Put 3 villas on or whatever, right? That is definitely changing a lot of the suburbs in and around Brisbane, certainly from my analysis. And what it means is that you're actually potentially competing, if you're trying to buy a house with some land, with a builder who's going to knock it down or put 3 villas on or whatever. Do you see that sort of bending the market compared with where it used to be?
Oh, look, infill's always been there. I think it's just now that more people are trying that strategy as a way to accelerate their earnings through the property market. So it's you have to buy the right zoning. So the zoning has to be right, the land size has to be right, the frontage has to be right in order to do any of that sort of development. And then you have to be careful that if it's depending on the different overlays on the Brisbane City Council plan, if it was built before 1946, you may not be able to demolish the house. So there's all sorts of hoops that you need to jump through before you can actually develop and subdivide or put units or townhouses or villas onto an existing residential lot. Yeah, you're competing with that, but I often find that owner-occupiers are the ones who'll pay more, who'll pay a premium for a property, whereas a builder has to focus very much on what their return on investment is going to be. So if someone's looking to develop something, they need to get a really decent return from the outlay and the time that it takes them to do that development and the opportunity cost of having that money in something else. So it's not generally builders or developers who are being successful, particularly in this market. It's owner-occupiers. And one of the really interesting observations that I have a daily huddle with my team, and one of the interesting observations was, normally I just want to talk about investors rather than, I know I've gone off your topic here, Mark, but
No problems.
I want to talk about investors versus owner-occupiers because that's where the really interesting story is at the moment. And normally in our business, about 45% of our clients are investors, about 55% owner-occupiers. Right now, our investors are only 16% of our client base. And that's anecdotally, that's what we're hearing from real estate agents as well, is that there are really very few investors in the marketplace. So all of this growth is actually being driven by owner-occupiers. What is happening then to the property rental market, the available rental properties, is there's not a lot of new stock coming on for tenants to choose from. Expats are returning and moving into their properties. So they might have, we buy a lot of properties for people who are going to return one day, and they have it as an investment property in the meantime. A lot of those expats have, and we at 10% of our the properties that we manage have actually gone back to the owners moving into them. So all of this is kind of culminating in a real sort of start of what I think is a bit of a rental crisis in Brisbane and perhaps in the other cities as well. But we're certainly observing that rents are going up. There are multiple people applying for properties, sight unseen in some circumstances. And these are houses, largely not units, because there's no new rentals coming into the pool. Investors aren't buying and people are moving into the houses that they had as rental properties. So that's a really interesting thing that I think we're going to have to watch very carefully.
Yeah, well, that's interesting because I'm seeing somewhat similar trends in some other areas now, particularly about the rental sector, because property investors, when they actually sit down and do the calculations on their cash flow, not just the gross rental yield, which of course is the one that people always throw out, but it doesn't tell you much, right? You need to look at the total costs of the rental property.
Net yield.
Yeah, the net yield, exactly right. And many unit holders are horrified to work out they're losing money. They're losing money, right? And they're only relying on the capital appreciation, which may or may not be there. So what I'm seeing is some property investors saying, well, maybe now's the time to skedaddle, particularly selling into that slight up movement that we're seeing in some sectors of the market.
Yeah, I'd agree with that.
Yeah, and I'm conscious of New Zealand, of course, because New Zealand just announced a whole raft of measures just last week to essentially make it harder for property investors to invest. So they're taking away tax breaks, they're taking away capital gains unless you hold it for more than 10 years. And the cries that came from property investors saying, well, hang on a moment, you're not taking us seriously. Property investing has got to be there as part of the mix because there are so many people who need rental accommodation.
Absolutely. Yep.
And so there is a really important discussion to be had about how to get the investment sector on a reasonably stable footing, because we need that rental flow. 1/3 of property owners actually are living in somebody else's property because they're renting, right? So they're not, they don't own their own property. They rely on somebody else to provide them, and that is going up. So if you look at it statistically speaking, so this rental question, which you've spotted, is an absolutely burning one, and yet it doesn't seem to me that politicians want to go near it.
Yeah, and it is something we're going to have to address because we've got we only manage a small sort of property management business, about 300 properties, but I had a really classic example, a Red Hill property, 4-bedroom, 3-bathroom. It was rented for $8.20 a week last year. Current tenants are paying $8.40 a week, so there was a little increase there. They're moving out. We advertised it for $860 a week, and we had 4 applications on it. A couple of those were sight unseen, so we needed to do some virtual inspections with them. But two applicants offered $900 a week just to try and get their application across the line because they'd missed out on so many other properties, and they were feeling quite desperate. So we're actually seeing upward pressure on house rentals at the same time as we're seeing upward pressure on property prices, and people starting to behave in ways that are a little bit concerning. It's almost like some people are throwing a dart at a dartboard and just picking a price out of anywhere as to what they're prepared to push themselves to just to get a roof over their heads.
Yes, and that, of course, is precisely the worrying behaviour, because essentially then logic goes out the window, right? And people take bigger risks because they're desperate. And often it can end up not where they hoped it will be, particularly when unemployment is not necessarily going to go down as much as where jobs are perhaps less stable than previously. So there's a bunch of questions in there that's actually pretty important. Of course, there are politicians who believe the solution is to allow people to tap into their superannuation to go buy a property, right? I'm not totally convinced that makes a lot of sense, because
I think that's a terrible idea.
Right.
Well, what's superannuation for? An employer pays superannuation in order to ease the burden on the taxpayer as people come into retirement age. So, how is dipping into your super a good idea to put a roof over your head?
Well, I'm absolutely with you on that one. To me, superannuation is about long-term savings for, retirement future, 30, 40 years down the track or whatever it is, right? And if you then start raiding it now and hoping that somehow the magic property bubble will continue to inflate and that will create value, well, it might, but it might not. To my mind, the people who are propounding it are myopically aligned to it, missing the big picture in my view.
I think you're right. I think the superannuation is a tool for first home buyers. There is a super saver scheme, which probably isn't a bad one if you really understand it, delve into it, do your research really well. It's simply a tax effective way to put money into a savings environment in your superannuation, but you can't access. So first home buyers that meet certain criteria can sacrifice above their statutory superannuation, and it's kind of just a tax effective savings plan, if you like, but you can't access your own superannuation, your statutory superannuation in that scheme.
Yes, now there are some techniques that are quite useful, as you say, but it doesn't mean whipping massive amounts of money out of superannuation to put a deposit down. And by the way, my research shows that over the last 12 months, a lot of first-time buyers got that $10,000 out from their super last tax year and this year, right?
Yep.
Went and got the government support package for first-time buyers, and then got money off parents to be able to put the money together to be able to buy a property. So they've basically pulled all of the levers, right? Now, the problem with that is that, if you're buying property without a history of savings, it can be quite tough subsequent.
Yeah, and I think that the greatest concern that I have for first home buyers is that the incentives that are out there are pushing them to purchase brand new properties. And brand new properties are the ones that generally you'll see depreciate for a number of years before they start to appreciate. So the incentives themselves are actually, probably aligning. And I think some people are starting to get the idea that there has been an artificial price increase in these new house and land packages or off the plan apartments or, these brand new properties that first home buyers have to purchase if they want to access these grants and incentives. But the concern is that those prices actually have gone up by at least the amount of the grant, if not more. So the first home buyers are actually, putting themselves in a negative equity position from day one, and then have to probably experience some negative growth before that property starts to appreciate.
Yeah, well, I always say to people, remember that if you buy a new property or off the plan property, right? It's like driving a new car out of the car park,
Yes, it
out
is.
of the garage, right? When you lose something immediately, it takes time to recover. But the other point is, if you are then wanting to sell subsequent, you are then competing with new property which is still being built, right? And that's the bit that people don't get.
We are talking from the same script, honestly, Martin. And I think you've debated this quite heavily with my business partner, Veronica Morgan, on a number of occasions. And that is, it is the building that depreciates. So if it's brand new, it's going to depreciate more rapidly than something that's established. And people just got to get their heads around that, the negative equity position that they're going to be in if they do go to sell, or they want to, in fact, use the equity in the property, the first property that they've purchased, to leverage into another property to upgrade or to buy an investment property. They may actually find themselves not only with no equity in the property, but the bank may ask them to dig into their own pocket and put some money out there to cover the negative equity position, to keep them at a 20% LVR, 80% LVR.
Yeah, and that's something which people, of course, are completely alien to, right? They've never considered that might happen, and it could well happen. And the other point there, of course, is that all of those homeland packages and all of that new stuff that's being built depresses the price of existing property that's also on the market at the same time. So just the supply-demand disequilibrium. So we saw that in Western Australia when they went for hell for leather in terms of their stimulus packages. So it actually had a negative impact on existing property. So, there's no such thing as a free lunch here. And I sometimes, say to the first-time buyers who ask me for some thoughts about how to think about the problem is not necessarily buy new unless you're really absolutely sure it's the right thing to do. But remember, you're going to take a hit for the next 5 years or so, right? So this is not going to be to the moon in 5 years. This is going to be, something you've got to think a bit longer and harder about. And
I guess I think we've thrown them all into the same box here. But as with everything with property, there's exceptions to every rule, and infill. New builds in character areas that are low density and it's a well done new build, they don't necessarily follow that trend of depreciation before appreciation. So I would say I'm more generally talking about those big house and land subdivision areas, not infill in character low density areas.
Yeah, the so-called high growth corridors. We're both talking about the same, right? High growth in terms of numbers of properties.
Numbers of properties being released, number of households being created,
yeah, but not necessarily the quality. I agree.
Price growth,
I think the odd infill, different proposition, and that's why you got to look granularly again. It goes right back to the fundamental principle. You can't just talk generically about property prices in Brisbane going X or Y, right? You've actually got to say what type of property, which location, what type of family formation you're looking at. All of those things come into play, which is why this is not a simple, straightforward conversation. It's quite complex.
No, it's not. It does, and it goes round and round, and sometimes we come back at a different answer to the same question, and that's that's because it's very personally dependent, and what people know from other states doesn't always apply to a particular suburb in Brisbane the same way as it might at a different suburb. And what I say about that, things are done very differently up here in New South Wales. And I just want to talk to process here because it's something that trips people up quite a lot, the difference between the process in, say, New South Wales and Queensland in terms of buying a property. In New South Wales, particularly Sydney, most properties are sold by public auction. There's a lot of talk about clearance rates, and clearance rates being how many properties were offered for auction versus how many actually sold. less than 5% of properties in Brisbane are auctioned. So it's not a very good indicator of market health. Most are done by private treaty, and that's where an offer is made to an owner on a contract, a single contract. It goes back and forth, but usually there's conditions on that contract. So a conditional contract is formed, and then the buyer does their inspections and finance approval and so forth. Really different to New South Wales, where there's an exchange of contracts and it's unconditionally exchanged. What that means is that one of the really difficult things that people are facing at the moment is the speed of the market in Brisbane and how quickly things are selling when they come on the market. So we've got a low supply issue, so not a lot of property is available for sale. And when those properties actually do come on the market, they're selling incredibly quickly. And people are making a lot more compromises than they have historically because they're fearing that they're going to miss out. There's an absolute overload of FOMO happening in the Brisbane property market at the moment. And people are prepared to make the kinds of compromises that they don't normally make. And we really see that evidenced by how quickly properties on main roads are selling at the moment and how little regard people are having for the price differential between a main road property and, say, a non-main road or a more preferential position of a property. And when people are doing that, they're the kinds of properties that we hold great concerns for those buyers, that they may have made a grave error in judgment over the price that they've paid, and they might sit on a bit of negative equity for a while. And if the market does flatten, they might have a lot of trouble selling in the future.
Yeah, absolutely. Well, it's like so many things, right? It's always a bit more complicated once you you peel below the top level. But I agree with the FOMO, and it's interesting. There's a lot of articles in the the real estate press and what have you, which keeps telling the story about how this property or that property went way over the expected price, etc., right?
Yeah.
Which takes us into a very important area of discussion, which is underquoting. Mm-hmm. Now, my question to you is, do you see underquoting in and around the Brisbane area, or
doesn't happen?
It doesn't happen.
It's illegal.
Yeah,
and I'm not being facetious.
Yeah.
It is illegal in Queensland if a property is being offered without a price. So if it's being sold by auction or without a price, then it is illegal for an agent to give any sort of price indication whatsoever. So they can't actually underquote because they can't quote. What they can do is provide information about comparable sales, and the owner has to agree to the comparable sales that are offered to buyers, and that is the only kind of evidence-based data that an agent can give if a property is being sold without a price. Now, what can happen is, and what we're seeing at the moment is that comparable sales methodology, it's a valuation methodology, and it generally, you look back 6 months or so at properties that are in a reasonably close vicinity, similar land size, similar land values, similar attributes, similar quality of finishes and so forth, and that looking for properties that were slightly inferior, properties that were slightly superior, and getting a bit of a feel for where the property might sit in terms of its price. But right now, going back 6 months is so misleading because the prices have been rising at such a rapid rate that you almost need to limit your pricing history to 2 months. So what people might feel is akin to underquoting is seeing comparable sales handed to them by an agent that are up to 6 months old, but the prices have moved so quickly that they are so far under what that property is probably going to sell for because of how much pressure buyers are putting on prices. We monitor price. When we see a really rapid change in prices that surprise us, we keep a really close eye on it, and we run a spreadsheet of what we think the property was worth based on comparable sales and what it actually sold for. And we started that analysis back in August. So this is at a property by property level. This is not suburb level. It's not Brisbane level. This is property by property level. So we're looking very granularly at price changes and what buyers are doing and how their behaviour is in terms of price changes. Back in August, we were seeing, I just need to look at my spreadsheet over here. Back in August, we were seeing an average of about 4 to 4.5% differential between what the data said the property was worth and what it actually sold for. So that was pretty consistent. You know, sometimes you see that 1 or 2, 3, maybe 4 auctions, but when you're seeing it consistently, there's a pattern, and we really need to pay attention to it when we're doing our pricing analysis. But as we moved into the start of the year, so there wasn't a lot of transactions in January, but in February, transactions really exploded. And that's when we started to see price differentials of closer to 9% between what the data was saying the property should be worth and what people were paying for it. And we're actually pushing up now to probably closer to 10%. There's been a number of sales. It was like a Super Saturday auction weekend this last weekend in Brisbane, the weekend before Easter. And there are a number of sales in there that were really, really incredibly surprising in terms of what people were prepared to pay for them. Now, is that the agent underquoting? Well, no, the legislation says that's what they have to do in terms, if someone asks what do you think it's worth, or what will it sell for? They can only give comparable sales, and those comparable sales are just not helpful at the moment if they're any more than about 2 months old.
Right, so that begs the big question. In fact, it was a question I got sent in beforehand by Chrissy, which just saying it's very hard to get any read on what comparable prices actually are, right? Because you can't really look at the online portals. In most cases, they'll say, offers over or something like that, right?
Yeah.
You can't get publicly available information about past sales in Queensland, at least. We'll discuss that in a second, unless you pay through the nose for it, right? So the question is, what's the best source of getting the comparable data to be able to sort of make some assessment of, what things really are, rather than what they're spruiked to high heaven in some of the articles that you read?
Yeah, it's a good question, because you do pay a lot for information from data sources. That's where these companies make their money, and that's fair enough. But you can go to the sold tabs on the major portals, and often the sold prices will actually be on there. So it's usually only moved to the sold tab. So you've got your buy tab, the rent tab, and then there's usually a sold tab. They move it around sometimes. You've got to dig around, but it's going to be there somewhere. And that's a source of information. But at the moment, there is such a large number of properties that are being sold off market or pre-market that they're actually not making it to the portals. So it's really important to have, for buyers to have their feet on the ground and actually be talking to agents. What did that sell for? What did that go for? And be so active in seeing properties that they're familiar enough with what is comparable and what's not comparable when they're doing their pricing analysis. But the data has to be really, really current. Once it's unconditional in Queensland, that's generally the price that it will settle at. That's probably as good a data and as recent a data as you're going to get, and you're going to get that from the agent. So it's conversations with agents about what things have actually sold for and understanding what those properties are that are going to be the major source of information, because there is just so much transacting off market.
And that takes me to another question from Alan, who said, how do you find a good agent? So, you're trying to figure out whether this guy is telling you the truth or that gal is telling you the truth or not. I mean, are they all equally, qualified and equally willing to share the truth? Or how do you go about separating the wheat from the chaff? I mean, that's basically the question that he asked.
That's a great one. Look, I think the thing is, you've got to, humans are different. Humans are, by their very nature, very unique. And what you need is just data and information. And when you're talking to an agent, it's as much about the quality of the questions that you're asking as to what you do with the answers that you get to the questions. So, a great example is people say, well, why are they selling? And I always say, well, what are you going to do with that information?
Yes.
Why are you asking the question? And the question is around motivation. So that's something that you use in a negotiation. It's not going to necessarily tell you what they'll sell for. So you've got to understand the questions that you're asking asking them the right way, and then being able to delve in a little bit more to get more information from the agent. And in that way, then you're guiding the conversation rather than relying on an agent who themselves may not know the seller's real motivation for selling, because the sellers might not be that upfront and that candid about their situation, and sometimes they feed a story, the agent then repeats the story, and that's how it is. Really, the only way, and I'm a buyer's agent, I'm going to put it out there, really the only way is to get an experienced buyer's agent to be asking the right questions and to make sure that they're delving in a little bit further, because a lot of what a buyer's agent does is not only find a property and work out what to pay for it, but it's actually understanding the seller's motivations and asking the right questions of the agent to ask the right questions of the owner to find that out. That can sometimes be the main difference in a negotiation that gets one offer across the line over and above another offer. And as I said earlier, most transactions in Queensland are done on private treaty rather than auction. On auction, it doesn't really matter what the seller's motivation is, because you're just competing with other buyers. So it's a vastly different question and a different approach. But it's very much about making sure you ask the right questions, and then what you do with the information and how you delve a little bit further, what it means, and how you choose to use that information is really important. But talking to agents and being, it's really hard at the moment because there's so many buyers. There are so many buyers who are prepared to make unconditional offers on properties that it's a really tough market for buyers to be in.
Yeah, absolutely. Well, we might come back to unconditional offers and the implications of that in a second. But the interesting point you've made is that if you're thinking about going through the process of buying a property, right, there's work you have to do, right? Now,
huge amount of work.
You can outsource some of it to a buyer's agent if that's what you want. I've got a question to ask you in a second on that specifically.
Yep.
But even in that situation, you can't just rock up and assume that you're going to get all of the perfect information from the real estate agents, right? If you haven't done the work, if you haven't got some degree of the comparatives, if you haven't done some research on the area, if you haven't actually got a sense from the triangulation of different data points, right? And I keep saying to people, do the work, because you will make better money by buying the right property at the right price on the way in than buying a dog or anything else at the wrong price and hoping that magically it's going to go up. That's not the way that you do it, right? And yet I am surprised, and I continue to say this, and I'll say it again, I'm surprised that people spend more time searching the price of a TV or a car online than they do when they buy the next property. It's remarkable.
It is remarkable, and I think the thing that people really have to wrap their head around in Queensland is the basis of property law is caveat emptor, literally let the buyer beware. There are no seller disclosure requirements in Queensland apart from, you ready for this? The seller has to tell you if they've got a safety switch, a smoke alarm, whether there's any QCAT cases currently against the property, and easements.
That's it.
That's it. So that they do not have to disclose anything about flood history, insurance risks, anything around if there's been any improvements or renovations. They don't have to show you that those have been certified. In fact, a lot of them aren't certified. So everything is on the buyer to know, what do I need to know? Who do I need to know it from? How do I verify it? You can't rely. The amount of times that I hear people say, the agent didn't tell me blah, 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 blah. Well, you know what? That's on you, because in Queensland, you've got to do your own research. And as you say, research. You've got to know where to look, how to interpret the information, what it means in relation to that specific property. And then you can go to the agent with specific questions. Have the owners obtained certification for the back deck? Can you show me that they have the appropriate Form 21? So it's knowing that you have to know what you need to know. And a lot of people don't know what they don't know. And that's what gets them into really sticky situations and ending up with properties that they haven't researched properly. And when they go to sell is often the first time when somebody does ask the right questions. It's when they go to sell that they realise that they've made a mistake.
And of course, that's the problem, isn't it? Because trying to exit is sometimes more complicated than trying to buy, right? So that's a whole
particularly if it's
ballgame.
not a racing market. You know,
No,
if
no.
it's a buyer's market and you're trying to sell something that you didn't do your due diligence correctly on when you went into it, and other people are finding out these issues that you didn't know existed, then you could end up with a real, you know, in a bit of a pickle and trying to sell something that has less value than you thought it had when you bought it.
Absolutely. Well, now here's a follow-up on buyer's agents, which you might enjoy. Do buyer's agents take on clients at the entry-level price range, or are you, in the more exalted ranges? What's the story there?
Yeah, look, buyers agents take on clients who are able to buy, so and are realistic. So a big part of what a buyers agent does is help at the front end before you agree to work with each other. You know, it's a decision in both directions as to whether you're realistic. You know, some people have champagne taste on a beer budget, so there's no use hoping that you'll get an $800,000 property for $600,000. You know, it's just never going to happen. But in a lot of cases, entry-level buyers have really struggled to put together their deposit, and they don't often have the additional cash that allows them to actually pay a buyer's agent to do the job for them. And that is a major reason why I mentioned before, Veronica Morgan, a buyer's agent very well-known buyer's agent in Sydney, and I developed a course for home buyers who couldn't afford a buyer's agent. So it's kind of affordable access to expert advice, but you know, can do it on your own. So that's an avenue that we thought was really needed for people who haven't got the additional funds to pay a buyer's agent.
Yeah, well, I just want to underscore that particular course that you guys run, I think is excellent. And I keep pointing people towards it because
Thanks, Martin.
It's one of the best ones that are out there. It takes people through the whole process, the thinking process. And that's the point. It goes right back to what we just said, right? You got to actually be getting the thought processes right before you even start going and look at property, frankly. So
yeah, and you don't know what you don't know. And that's the thing. A few of our students have said to us, you know, they've been through the process, purchased properties, and it was, you know, one student said to me, and we're talking about mature people here. We're not talking about 20-year-olds. We're talking about people who are fairly well established, but they don't know what they don't know. And I think that's the really important thing that you've got to keep in mind with property is it's the great Australian pastime, and everyone likes to talk about it, and it's water cooler conversation, it's barbecue conversation, and the Uber driver's got an opinion. But you don't know what you don't know, and until you go step by step and in the right, put things in the right order and do things in the right way, you suddenly move from a position of having blinkers on into a position of almost power in the conversation and in the process to know that you're doing things in the right way and at the right time and using the right jargon and terminology. You know, sometimes it's funny. You know, we get great feedback from students, and sometimes students say, I had no idea what they were talking about when they used this term or that term, and you know, that now realise that they've used terms in error. It's the wrong time, the wrong place. So even just getting the jargon right is really important.
Yeah, it is. There's a lot of jargon, but it's like in financial services more generally, right? As soon as you strip it away, you realise that actually it's a whole lot more simple than many people would want you to think. Now, here's a question from Joe, which I think is quite an interesting extension of that. So do real estate agents have a requirement to be honest when you ask them a direct question?
Absolutely, yeah. So a real estate agent can't mislead. There is such a thing in the industry called puffery. Puffery is generally, you know, how they kind of sell the property to you and talk it up, but they cannot be misleading. So if you ask a direct question, then that answer has to either be I don't know or whatever they honestly do know. But because there is so little seller disclosure required in Queensland, often they haven't even got an answer from the owner about some of the questions that you might ask them. So they've got to go away and probably find out for themselves if there's a direct question about something. But no, they can't mislead. And you do have recourse if you are misled.
Yes, and some of the things I sometimes say is, you know, it's worth sometimes not just having a sort of a loose conversation on the phone, but getting some stuff in writing occasionally is actually quite useful, because you start to build a body of evidence that if you discover then later that you've actually been misled in some way, at least you've got a path. Whereas, of course, all done by phone or email, and don't keep the emails, you've got no real way to go.
Yeah, absolutely. Look, it's everything in writing. Even offers are not worth the paper they're not written on. So, it's important to outline everything in writing, and to have it confirmed in writing if possible, even if it's a text. Screenshot the text, you've got it then.
Absolutely. Now, let me just go to this particular slide. This is actually Surface Paradise, right? I said we'd look beyond just Brisbane. And Surface Paradise, this is units, right? So a bit of an acceleration, not dramatic, but some acceleration more recently. If I compare that then with, whoops, I'll get rid of that. I'll put that one up. Push the button twice. Houses, right. So houses, in fact, houses, again, looking quite strong. But at Surface Paradise, houses have been moving quite fast for the last 3 years, right? So there's some interesting difference between units and houses, right?
Yep.
So give us your perspective on Surface, and specifically the differences of behaviour between units and apartments, if you'd be so kind.
Well, I was really fortunate on the podcast that I co-host. We actually interviewed a buyer's agent from the Gold Coast and one from the Sunshine Coast in a recent episode. So very fortunate to have their on the ground take on this, because they're not my market, so I don't know them intimately. And I think you're foolhardy to comment on something that you don't know intimately and know at a really granular level. But Tony Colgren, who is the buyer's agent down the Gold Coast that we were talking to, he was talking about how house prices have certainly been outstripping in terms of growth and demand units consistently for a number of years, and it is still the case. And again, I think it's a supply. He certainly was pointing to a supply issue with the number of new apartments being all along the coast, actually, the number of new apartments that are being built. And Surface Paradise in particular has had quite a dramatic increase in the number of apartments that are built. And of course, the more apartments that are on the market down there, the more downward pressure there is on the established apartments that start to look a little bit old and a bit daggy when the newer, shinier apartments go up. So I think that's the theme that Tony was certainly talking about on the Gold Coast. But both Gold Coast and Sunshine Coast housing has, I think, the demand is unprecedented. And I talk about Noosa as a classic example. Whilst it hasn't got the highest median house price growth, that sits with Sunshine Beach at the moment, there's a specific example that a client of mine told me about in Noosa. There's just no supply there at the moment. And this client had a friend who owned a property on the river in Noosa, and someone knocked on his door and said, I really want to buy it. What price would you sell at? And he thought he threw out the most ridiculous figure of $7 million, and this person paid it. Now, that person that sold the property has been looking for a property to buy and can't buy anything, and got so desperate he went back to those people who bought his house and offered them $7.5 million, couldn't buy it back off them. So in these coastal areas, there's no supply. There's a huge amount of demand because so many people have realised that they can continue their high-paying jobs in Sydney and Melbourne and work from home and commute on a less regular basis than they had in the past. And I think that's the thing that COVID has given the coastal markets is that it's really put a high level of demand from high-income earners into those areas who are looking for a lifestyle whilst maintaining their jobs in interstate.
Yes, absolutely. And, the fascinating thing about the coastal areas, and I've looked in detail at both the Gold Coast areas and the Sunshine Coast, is units, apartments and houses are going completely differently, right? And as you say, it's the larger, standalone places, people moving up from Sydney and Melbourne in particular.
Yeah.
As you say, digital, you can be connecting there. And the fact of the matter is that the relative price relative to Sydney and Melbourne still quite attractive, but lack of supply, significant demand. And that's without the international borders open, when that's without a lot of international people coming back in. So I guess, more broadly, one of the sorts of questions I've got is, given that we're probably going to have the borders locked down for a few more months yet, right? Given the fact that therefore migration is probably net, other than people coming back from overseas, and there are some of those, do you think that sort of level of demand is going to continue, or do you think that with the virus getting, well, hopefully more under control than it is at the moment, was that a temporary thing, or do you think this is a more permanent change in terms of people's perceptions and people perhaps thinking of the Sunshine Coast and maybe Gold Coast as the place to come to?
Yeah, it's an interesting question, and I don't really like to crystal ball. I don't like to predict. It's not my space. I'm not analytical to that level of predicting what I think is going to happen in the future. What I can observe is people's behaviour, because property is very much about behaviour and emotions. So the supply and demand side of things are people. They're people who are selling, and they're people who are buying. And the behaviours that we're seeing certainly aren't stopping. And those behaviours being a rush to move to a more lifestyle focus. And maybe that's what COVID has taught us, is that, we had that period of lockdown where we just really had to bunker down with our families and spend more time and maybe value our time a little bit more differently. And from a property perspective, what that has meant for a lot of people is to say, I don't want to live in the hustle and bustle of Sydney or Melbourne. I want to live in a really nice lifestyle location and have my cake and eat it too, and still have the income that I was earning before. And because that's largely what has held prices back in Brisbane, is that we don't have the growth in executive level jobs that bring people to Brisbane for work. Generally, when people come here from interstate in the past, it has been to downsize their lifestyle, to downsize their income, sell up, use the money to buy a property up here, and then go into a more of a cottage industry or self-employed or something that isn't necessarily an executive level job. So I think that's the biggest thing, and if that continues, then the supply is going to be the biggest factor. And what we're seeing is this kind of bottleneck of people not selling their properties, so they have a motivation to upgrade or move or downsize or whatever the case may be, but they're not going to sell their property until they buy something. And until they can buy something, that supply is sitting there unable to be released. And that's the big bottleneck that we're seeing. If that changes and we see more supply come on, then we might see a little bit more steadying of prices. But I'm just not seeing that behaviour yet. I'm not seeing that change. And we see it really early as buyers agents. We see, at the moment there are multiple offers on every property, people making offers at the first open house or before the first open house. There is just so much activity and so much fear of missing out. And people are very confused about what their money can buy. So they're sort of throwing darts at the dartboard to see what they can and can't buy. I'm not seeing any slowdown in that kind of behaviour. And that's the thing that I think will continue to drive the growth through this year at least. Going forward after that, when the borders are a little bit more relaxed and we start to see, who wouldn't want to, in any other country, who wouldn't be looking at Australia and thinking that is a much better place for my family to grow up than where we are at the moment from a lifestyle and a health point of view. So I wouldn't be surprised if we see a bigger influx of migration once that happens.
Yeah, and we've actually got some evidence of people internationally looking at Australia and yearning to come. So I agree with you. I think that's going to be definitely a significant.
So that's a whole nother level of demand yet to come.
Correct, exactly right. And the interesting supply-demand equilibrium question is really, really important, right? Because we know that in some areas we actually do have an oversupply of properties, particularly units, right?
Yeah.
But there's a massive undersupply of houses, generally, other than in these high growth corridors where you've got this cookie cutter approach and thousands and thousands and thousands of properties being built. But that's not where people want to buy, right?
No, it's where people buy if they have pressure on affordability, and they want something that is look, I don't know. It's not my cup of tea. I'm not a big fan, as you probably picked up. But high growth corridors. Yeah, as we said before, they're not high price growth corridors. They are high household growth corridors, and largely cookie cutter, all the same. Once the next release is done, then the established properties generally are not looked at as favourably, and downward pressure on prices because the demand just isn't there for resales.
Absolutely. Now, just as we sort of come towards the last 20 minutes or 15 minutes or whatever it is, I just wanted to share this one. Now, this is Toowoomba, right? Now, the reason I wanted just to briefly mention Toowoomba is because Toowoomba is, in Queensland, the highest stressed postcode in Queensland, right?
Mortgage stress?
Mortgage stress, yeah.
Yep.
And you can sort of see there that the prices really, compared with 2013, this is for houses in Toowoomba, have really not done particularly well. After inflation, 0%, 1.8% gain. And in fact, I think the story for units would be somewhat similar, right? So
wouldn't be a lot of units there. I think you'd find there'd be a very low percentage of households that are multi-unit. Yeah.
But the houses story here, right? And it's one of the things I just wanted to bring up, right? It's quite interesting seeing a correlation between some of the dynamics with regards to where prices are going, what's going on, and the mortgage stress that's underpinning it, right? And Toowoomba is an area where we've got lots of people who are right on the edge at the moment, a lot of job keeper, job seeker stuff, right? Now, the reason I showed that chart was really just to sort of flow into a sort of, what do you think is going to happen with regards to job keeper and job seeker, coming to an end, the principal interest holiday repayments coming to an end? Do you think it's going to have much impact on the property market, or do you think really, we're beyond that now in Brisbane?
I guess we've got to look at the different sub-markets and largely the people who have been supported by JobKeeper and Job Seeker. Well, certainly if they're on JobKeeper, they're probably not paying a mortgage, probably more renters. And the industries that have been most impacted by the economic changes that have happened as a result of COVID are probably more of, again, the rental type market. So people who have been in the tourism industry, the hospitality industry, the entertainment industry, they've probably been the sectors that have been most affected and have relied most heavily on JobKeeper and Job Seeker. They're not generally the types of people who are buying the kind of properties that we're talking about in Brisbane, for example, but they may be owners of properties in lower priced areas, and they're the areas where the median house price is quite a bit lower than the local Brisbane local government area. They're the areas that I'm probably most concerned about, and concerned that there will be more mortgage stress and perhaps some distressed sales coming out of those lower priced areas.
Well, that's what I'm seeing in my data. So my prediction is that in those areas we're going to see...
I'm glad I got that right.
No, you've been following the plot. That's good. There are a lot of people who are essentially now to the point where they realise that they're going to have to do something more severe, right? And the banks, of course, are sort of encouraging them now to take that step. So I think what we're going to see is in some of those, more stressed areas, we are going to see more supply coming on. Not necessarily in very most attractive areas, I have to say, if I'm honest, and therefore, it won't appeal to everybody. But there will be areas where I think we're going to see probably a bit of a sort of a correction. Now, interestingly, there is a bit of mortgage stress also in the high-rise area in Central Business District in Brisbane. And that's because the rents are a bit more, accelerated there because of where it is. And unfortunately, there are people who are beginning to struggle with the removal of JobKeeper.
Interesting.
Yeah. Right? So I wonder whether we're going to see a little bit more damage there in terms of the Brisbane apartment market. So watch that space. But
Yeah, I would agree. And again, it's a supply concern.
Yeah.
There were so many new developments in Brisbane City in the last 10 years. And people aren't generally city apartment livers in Brisbane. They tend to go more for, that suburban house on a piece of land in an established area. So a lot of those were sold to investors, those inner city apartments, and of course investors are going to take an opportunity investors looking for that return on their investment, which comes through both capital growth and rental income. Because there's so many of the same thing, it's hard to rent some of these places. So investors just aren't getting the return. And I think that they're probably going to look at, well, if this is the best market that I'm going to have in the coming years, maybe this is the least amount of loss that I'm going to experience if I sell it now.
Yeah, I'm afraid that's right. A lot of investors in my surveys are actually in that school of thought now. And because prices are sort of moving up a little, they're looking at, well, maybe this is the time to exit. In fact, there was a bit of a rush to the exits before the end of March. I had in my surveys quite a few people saying, well, we want to try and get it on the market and closed before the end of March. So I think the March to June period will be quite interesting in terms of seeing how that plays out, particularly again in high-rise land.
Yeah.
And your point about supply in central Brisbane is quite important. There are still more high-rise buildings underway. There's still another 50 to 60,000 planned, right? If you add them all up, right, at various stages of dress or undress, that's a large number of additional properties coming in. Plus, of course, the repurposing of some office buildings, because now the office accommodation is less used for office accommodation simply because people are working from home more. So
and a lot of those, some of those older buildings have been repurposed into student accommodation because we do have a very strong international student population that moves in and out of Brisbane, and there was some repurposing of some commercial buildings a number of years ago, and of course they're largely empty at the moment. So anyone that took that strategy as an investment strategy, and certainly not one of my recommendations, but if anyone has relied on international students for their rentals, then they're probably looking at that kind of thing and wondering how quickly they can get rid of it.
Yeah, I think that's right. And of course, the student migration question is a really big one at the moment because we've got a lot of similar things in Sydney and Melbourne where, again, in my one-on-one conversations, I was speaking to one person who had a whole block of student accommodation, right? Normally it would be, completely full, and basically they had occupancy of about 5%, and no hope of that turning around. No ability to sell it because no one would buy it. Because
there's no one to buy it.
Exactly. So it really is again an object lesson in be careful what you wish for with some of this stuff because sometimes things don't go the right way.
You've got to be careful about your strategy. The strategy going in, the longevity of it. I mean, it's certainly no one could have predicted what happened in 2020 and the impact of it. But just even as a strategy, having such a singular tenant pool and very, very few buyers of that property is both going to impact your income along the way and your saleability at the end because you just haven't got, the people that pay premiums for properties are owner occupiers. So your growth is therefore stunted because you haven't got someone who's going to pay a premium for your property at the end if it's a very singular investment strategy.
Absolutely. Well, it is a remarkable story, I think, in terms of particularly the investment sector, and I think we're not out of the woods yet. Now, there was one last question I just wanted to get your thoughts on. This is from RH. What's your thoughts on buying apartment versus landed property as you move towards retirement? Interesting question. Yeah. And, there are a lot of people thinking about, do I downsize? We have a number of people in our models and surveys, which I call down traders, which are looking to move from the larger property to a smaller property. And the question is, do you move to an apartment or do you buy a landed property? Any sort of specific thoughts you have there?
Yeah, I do actually, and this is why I mentioned before. There's many tiers in the apartment market in terms of the cookie cutter versus the the house sort of size downsizer down trader category, and it is proving very, very popular, and prices are very strong in that sector. And I don't see that slowing down, because it is largely a lifestyle decision that people are making to move out of a house on land and into something that is so low maintenance but so enjoyable and gives them such a lifestyle aspect. I don't see that trend slowing down. I actually see it increasing. So we're seeing it more and more and more. People moving into apartments after they sell the family home rather than moving into a house. And if you think about it, moving into retirement and possibly that being your last pit stop before a nursing home or waving goodbye, it's something that doesn't necessarily, the capital growth of that doesn't necessarily play strongly on the mind in the decision-making process, because that ends up being part of an inheritance pool rather than a need to sell to finance another phase of life. So people are sometimes looking at these and saying, well, if I don't get a lot of growth out of it, it doesn't really worry me. As long as, I've sold the house, I'm a cash buyer, as long as there's something left for the kids at the end of it, I'm not as focused on capital growth is sometimes the thinking when people are downsizing.
Yeah, and I just add one point to that, and that is that there is a phase in life when you move into a house with a garden and it's all fine, right?
Yeah.
But as people sort of age, the garden can become a bit of a problem. Right?
Yeah, absolutely.
Unless you get a gardener to come and to do it for you, which of course can be quite expensive. So one of the things that I sometimes say to people who are trying to work out this sort of trade-off, because they like the idea of being standalone, a little bit less noisy than having people upstairs or downstairs, right, in an apartment. And many apartments, frankly, are not that well built from a noise transmission perspective, in my experience. So you have to trade off, if you like, some of those livable questions with regards to the maintenance. Now, my own strategy, because I've got to that sort of age where I sort of was thinking about downsizing a little bit. Well, we decided that we would actually move somewhere which was cheaper, so we could actually release a bit of capital. And we actually decided that we would actually keep a place with a bit of garden, because we actually quite like the green, and decided that we could live with that for a period. But there is going to be a point in, even in my case, when I think, well, actually this is too much. So it's a tricky situation, and it's not like it's a one-time, because health doesn't necessarily continue at the same level forever. Yes. And people's mobility can change and all those things too. So it's a really tricky one. I actually think the downtrading, the downsizing conversation in many ways is probably the most complicated part of the life stage. And I know first-time buyers have it hard, but I actually think downtraders at the moment particularly have it even harder.
Yeah, well, they're starting to make decisions that are around the impact on their children in a lot of cases, because the decisions that they make are probably the last big financial decisions that they will make towards the end of their lives, and that can weigh heavily on how they perceive or think their children perceive their decisions and what decisions they should make. So there's sort of that extra layer of pressure, I guess, to make sure that there's no runway. First time buyers have a runway. They can make a little mistake, and as long as they correct it, they've got time to build. But as you pointed out earlier, you set yourself, the buying decision is often the biggest and most important in getting that right, and the exiting decision often is made for them as they at that later time in life. So when the property is sold is not necessarily at their own will or by their own decision. So there is that extra layer, I think, of thinking about the considerations of what will happen when they no longer, or when that passes into inheritance, and what's the impact on the kids of the money that they would receive.
Well, that takes you to a whole new world about to what extent do people use the money they've got for their own gratification to the end of life, and to what extent is it passed down the generations? That's a whole new ball game.
It is
I'm not going to go there.
Different conversation to have. I keep telling my parents, go and enjoy your money.
but it isn't. And look, the interesting sort of side of that is more people go into retirement with bigger mortgages. right?
Yes. Yeah.
And more
That's
people
alarming, isn't it?
end up with having to essentially try and maintain those mortgage repayments into old age.
Yeah.
The other point is a lot of people, of course, end up going to retirement just renting, right? So they've never actually bought. And they are actually the ones probably in even the worst situation with regard to this. So there are some big life stage questions at that end of the spectrum, which I think sometimes are forgotten in the midst of everything else that's going on, right? So
That's a whole topic there.
Well, it is. Maybe that's another show.
That's another show.
yes, that's right. And somebody just put in the chat that I'm getting old. Well, probably I am. Yes,
We're all getting older.
I should have retired already, but I just like doing what I'm doing too much. Well, we've come to the sort of the cutoff point now. Just before we go, Meighan, where can people find out more about you?
Okay, so there's a couple of ways. My buyer's agency business in Brisbane is Property Pursuit. You can find me on propertypursuit.com.au. We have a good sized team there, both buyer's agency and property management. And then the other business, which is the educational side of things, is Home Buyer Academy, and that's homebuyeracademy.com.au. But for people who are generally interested in property, also co-host a podcast, Your First Home Buyer Guide, and you can find that on YouTube or Spotify or a number of other places. And that's a weekly podcast that is just all about property. There's no particular agenda to it. It's just sharing some of the knowledge that Veronica Morgan and I have built over, our shared 40 years of experience in the industry, with a lot of funny stories in it as well, because we've seen some really funny stuff in our time. So that's a really good one to just tune into every week.
Excellent, yeah. And I have listened to a few of them, and it's hilarious. I don't know how you keep it up.
Veronica and I have a rough script, but the amount of times that we're off script is probably more often than on script.
Yeah, well, that's the beauty of it, I think. I like the informal nature of it, but also the fact that you have a whole lot of really important messages to get across to it. So I thoroughly recommend that, and we'll put the links and things in the comments below for those who are watching afterwards.
Oh, that's great.
So look, I've really enjoyed our conversation. Sorry about the slight stuttery start with the technology, but
it follows me around, I think.
But we got there. I think you made some really, really important and significant points here, particularly with regard to the Brisbane market. And I look forward to perhaps picking up the conversation down the track again when things may or may not be less or more clear. Who knows? But
who knows? We'll check in a couple of months.
So thank you very much indeed, and
Thanks
really
for having
appreciate
me,
your coming on the show.
Great.
Thanks. Cheers. Bye. Okay. Well, I think that is all good. So thank you very much, Meighan, and I'm just going to sign off on the rest of the show now, and just to explain to everybody that we had a slight technical hitch at the beginning of the show, which means that some of the stuff that my technology is a little bit fragile at the moment. So I'm not going to chance my arm with too much, but I will just say this, that next week I will be actually updating the household stress and scenarios to the end of March. There's a lot going on from the data. That includes the latest JobKeeper, JobSeeker stuff. So join me next Tuesday at 8 p.m. Sydney time for that. I'll also have the postcode engine online, and also I noticed there were a few people asking about other suburbs in and around Brisbane. Again, we can cover some of those in the chat next week. I also just want to remind everybody that I do run my one-on-one service, which is where if you want an individual conversation about a particular suburb, I can pull out all the information from all sources I've got from my models and things and help to perhaps answer some of those questions that, as we said in the show tonight, are so critical. So just bear that in mind. If you're interested, send me a message via the DFA blog. Details again below. And with that, I'd like to say thank you very much for spending some time with us this evening. So thank you very much. We'll see you next week. This is Martin North from Digital Finance Analytics. See you next time.